Welcome to Morpheus Trading Group. Today's technical setup is a review and update of a trade that we first presented on May the 22nd of the PowerShares US Dollar Bull ETF, PowerShares Dollar Bull ETF, ticker symbol UUP. And for those of you who didn't see our first presentation on UUP, let's take a moment to review what we refer to as our first thrust reversal setup. That's what we call this technical setup. Now, the first component of this setup is that there must be an established trend, in this case, a downtrend. And a downtrend consists of a series of lower lows. That's a lower low. A lower high. This was the original high. There's a lower low. A lower high. A lower low. A lower high. Lower low. Lower high, and so on until we get to the bottom. Now, the second component of the first thrust reversal setup is that there's a capitulation move at the end of the downtrend. The downtrend, notice the downtrend follows the 20-period exponential moving average. Every time the UUP attempts to break through the 20-period MA, it's repelled away from it, only to bounce back into it, repelled away, bounces back in. And of course, it also follows the downtrend line, which we draw across the tops of each one of these bounces, each one of these rallies. Anyway, back to the second component. What we're looking for is a very significant undercut or breakaway from the established trend. Notice how all these bottoms, this one, this one, this one, this one, you could draw a line straight across them and they more or less connect. But then you get to this particular breakaway move, and of course it falls well below the rhythm of this particular downtrend. It's a big undercut, and it breaks away from the trend itself, and that's what we consider to be a capitulation move. And as this occurs, volume begins to pick up. Volume will expand to a level that's anywhere from 150 to 200% of what the volume has been during the downtrend. Notice this expansion right in here. Now, the next thing that we're looking at is that when you get to the bottom here, when you hit the bottom of capitulation, you'll notice that we have 1, 2, 3, 4 candles in a row where we couldn't break to a lower low, no matter how much volume was coming in to this particular ETF UUP. It consolidated at these lows. Then on this day, there was a massive spike in volume. A spike in volume unlike any spike that's been seen in a particularly long time, on a daily basis for this ETF. And with that spike in volume comes a breakaway gap to the upside. We break away from this base, and within 2 days, very quickly, on a massive move back, we're right along the trend line again. So there's a massive breakaway and a massive return. Now, we don't want to try to enter or chase this trade, because how do we know where it will stop? Does it stop here? Does it stop here? Does it stop here? We don't know. So what we look for is some type of consolidation. If you notice right here, we have several days of pullback where we come back into the 20-period moving average, which by this time has begun to turn back up. If you notice, it's been downsloping this whole time. But when you get this massive move, all of a sudden the 20-period moving average begins to turn back up. And as it turns back up, we come in. It was this day, when we broke above the high of this candle right here, that we entered the first portion of this trade. Now, we have specific reasons why we entered the trade here. There's particular things that we teach about trade entry and what triggers, what price would trigger a purchase, what share size we would take, and so forth. But this is, we entered part of the trade here, And the next aspect of a trend reversal, first thrust trend reversal, is that you then need to establish a consolidation base. You have to have consolidation from which to springboard to the next rally, to the next move up. Now, during this consolidation period, notice how this UUP just moves sideways. It stays above at or above the 50 period moving average, which is this bluish colored line, and of course above the 20 period moving average, and it moves sideways and consolidates. Now on this day we added to the trade because we received another buy trigger signal, and we added to the trade here. The next day we had a massive gap up on a big expansion in volume, and we ended up selling 2/3 of this particular position, 2/3 at $21.84, and our average price that we've purchased on this day and this day was $21.62, so we made a nice profit. And we now are still holding 1/3 of this position, and notice again UUP is consolidating. It's pulled back some, just like it pulled back here. It's pulled back some. We now have this consolidation area as support. Okay, there's going to be a lot of buyers here willing to step in and hold this up. We have this as support. We also have the 20 period, the greenish 20 period moving average, and this 50 period moving average as a support level. So we anticipate that with a few more days of consolidation, possibly even a pullback down into this area, we'll get a reversal, and the next move up we expect to take us somewhere around the $22 mark. One aspect of our trading that we teach that's very important is what we call the numbers behind the trade. It's easy to learn a technical setup, but what's difficult to manage well is the rules for the trade. When to enter, when to exit, position size, and so forth. That's what makes a successful trader. Anyone can enter a trade, but it's how you manage it, the mathematics behind it, how you manage it, that determines whether you'll consistently make money. You don't have to have very many winning trades to make money. We find that with 40 to 50, 60% winning trades, you can make a lot of money, but it's how you manage the trade, and that's what we teach at MorpheusTrading.com. If you found this presentation useful and interesting, please visit our website, www.morpheustrading.com, and you can sign up for a free membership to receive future trade setups just like this one. Have a great day.